Welcome back to Market on Close. Just a few minutes left in the trading day on this Friday. That means it's time for the big picture. So we'll welcome in our team from Charles Schwab. Joining us today is Cooper Howard, the director and fixed income strategist at the Schwab Center for Financial Research. Cooper, thanks as always for being with us today. We've got the Fed meeting coming up next week. What are you watching for?
We do, and thank you for Marley for having me on. Next time you might have to shorten that to our acronym, SCIFR, Schwab Center for Financial Research. So just teasing you a little bit there. But in terms of kind of what we're watching for the Fed next week, I would agree with your previous guest that we're expecting a 25 basis point rate cut. But I think that it's going to be a really interesting and kind of a really weird Fed meeting. It's something that I was reading a lot about, and I'm going to steal this from another publication, but they said that this is probably going to be one of the more weird Fed meetings that we're going to have for quite some time. And there's question marks about who's even going to be in the room for this meeting. So if we take the Myron situation, for example, there's potential that he's going to be fast-tracked and is already going to be approved on Monday, which would set him up for going into the meeting on Tuesday and Wednesday and being one of the voting voices on what they do with the Fed funds rate. Also, if we take the Lisa Cook situation, there could be a ruling on that as early as Tuesday. So that, I think, is an interesting situation to watch and seeing how that develops. So a lot that's going to develop before we even get to Wednesday, and then definitely looking forward to potentially what happens in terms of what they project and where we think the Fed funds rate is going to go forward for the rest of this year, as well as into 2026.
So, Cooper, you're my first guest, and we've talked a lot of Fed who said that this meeting is going to be weird. I want to follow up on that. Obviously, the voters and who's actually voting is of some issue here and some concern, depending on how you look at it. But what else about this particular meeting makes it unique?
I think the other thing that doesn't necessarily make it unique, but we are also going to get the summary of economics projections and the dots plot. So I think that that's going to be really something that's interesting to look going forward. Our expectation is, depending upon how the data develops, we would expect another one or two 25 basis point rate cuts. So I would not be surprised if they illustrate that in the dots plot, a little bit more of a dovish preference towards moving the Fed funds rate lower. What I think is though going to be interesting is where do they project things into 2026? We obviously got a lot of inflation data and it wasn't moving in the right direction this week. We've also seen a lot in the labor market and that's been softening. So combination of higher inflation, slower labor market, that really puts the Fed in between a rock and a hard place, Marley. So a difficult place to be for policy going forward. So I'm going to be closely watching. Do they project more rate cuts into 2026? How fast, how quickly are they projecting those rate cuts? And then what happens in terms of Chairman Powell's press conference? Does he lean a little bit more dovish? Does he lean a little bit more hawkish? Or does he continue to follow by the stance of, we're going to let the data guide us, we're going to take it meeting by meeting, we're going to be cautious? I wouldn't be surprised if that's the approach that he pursues.
And the last meeting where we got these projections was one of the first in a long time where we had seen some very clear division between the voters in the FOMC. Do you think that we'll continue to see that with sort of both sides of the line in disagreement, or is the data coming in so strong that you think we'll see more alignment this time?
No, I definitely would not expect alignment, whether it's the dots plot or even who votes for a 25 basis point rate cut. So assuming that Myron gets confirmed and is one of the members that can vote on it, I wouldn't be surprised if he dissents in favor of a 50 basis point rate cut. Or you potentially see other Fed officials vote in favor of a 50 basis point rate cut. Now, do we think that a 50 basis point rate cut's coming down the pipeline? Probably not. Like your previous guest had mentioned, the probabilities and the market expecting that are very low, and that's our expectation that it's not going to happen. But I do think that there's probably going to be some dissent about that, and there might be some dispersion in terms of how all of the dots are laid out.
And with all that said, Cooper, what is your outlook for rates, knowing that we have likely at least a few rate cuts coming from the Fed? Where should people be focused?
Yeah, that's a great question. And I think really what it means is that if the Fed cuts as we do expect them to, as well as what the market is expecting, that should pull shorter term yields we think longer term yields, they likely don't have too much downside left. So we would expect that the yield curve should steepen. And if you've been following some of what we've been discussing with clients, really one of the pieces of advice that we've been discussing, Marley, is to continue to target an intermediate term duration. If they have large cash allocations, consider moving out the yield curve, locking in some of those yields. Even though we've seen a little bit of a pullback in longer term yields this week, we still think that there are opportunities on that part of the yield curve.
Cooper, we appreciate you being with us as always and for your insight. That's Cooper Howard from the Schwab Center for Financial Research, or as I've been told, I can call it Skiffer now.